I offered Christopher Peel, Chief Investment Officer at Tavistock Investments, I offered him anything. I said, do you know what, I've got your notes and there's lots of things we can talk about and we will talk about EM or rates or floating rate or whatever. And I offered him anything. And do you know what he came up with? Brexit. so on that basis, Christopher Peel, good morning to you, my friend. You must have a brilliant trade on that the rest of us have missed.
Sadly, I wish I did, but I don't.
All right. What do we do? What do you do?
Well, you've got to almost do what I've done, where I just try to take it out of play best I can. Yeah. You look at where sterling's valued. It's probably in the middle of almost a 20-point range. On a deal, no deal, it can break either direction 10%. As an investor, that's a pretty aggressive stance. So my view is just try to hedge away your exposure best you can and leave it and chase it from behind on whatever the outcome is. But it's just hard to envision there being an outcome.
So that's not comfortable territory for you and anyone who likes being proactive. You're talking about reacting to whatever momentum is created by a decision or no decision, a fallout or no fallout, a hard Brexit or actually a deal being done as well. Is there not, bearing in mind you have a background of proprietary trading as well, is there not a proactive trade using some form of volatility product?
It would be very expensive to go into the option market and design a trade. My view is, my lean is I would love to buy UK equities. UK equities are cheap. I think they are investable. I don't agree with the Bank of England that on a no deal that the pound goes down to 1. I don't believe that. I don't think the economy collapses either. I think the UK relative to Europe has a lot of positive fundamentals. There's some significant issues in Europe. The social unrest, whether it be in Paris or in Italy, those aren't going away.
Just to follow the option route one more time. Having an option background myself, so I kind of have a bit of a penchant for that area. Why do you think? You say volatility is expensive, but that creates opportunities. You can trade the skew, you can trade the calls versus puts, but on puts. I don't know. There's something, but it does seem to be, and what you just said seems to be what I'm hearing from a lot of people, that people do not want to trade on these volatility products at a time when you will get some form of extreme volatility over the event.
Well, it almost seems as if it's just a barbell. There's nothing in between. From a standing start today, I think it just goes 10% in either direction. Actually, I think to the upside, there's more upside in sterling. On a trade deal or some orderly withdrawal, I think sterling goes higher, significantly higher, back to purchasing power parity average in the high 140s.
Yeah. Let me go back to your point on the Bank of England, because I'm actually very sympathetic with that. How to play the monetary policy cycle now, which is actually, it's not a cycle, it's a monetary policy mess, right? We don't buy the argument that this economy is going to collapse in a non-deal situation, right? If we actually hit the wall. But by the same token, as I said before, it's a capital flow story, right? So, that's fair enough. I would imagine that some points of this economy might falter, and the Bank of England might actually react to this, right? From the MPC point of view, how to play this curve now?
Well, I think there's been sort of investor, benign neglect towards the UK over the last 2 years. So I think any of the hot money, it's gone. When I think there's a lot of the negative news of a no deal is in the market. I think Mark Carney is a Marmite figure. I think it's extraordinary where you can have a head of a central bank come out and say, well, if the vote goes this way, or if there is no deal, the economy collapses, the London housing market falls 30%, and the pound falls.
Is he just doubling down on his 2016 trade, where he put out a lot of cautionary prophecies which have failed to come true as of yet?
No, I think he's trebling down on that, because he was negative before the vote, after the vote, and subsequently. And you can't really trade on what's coming out of the Bank of England, because they've been so consistently wrong and negative.
Is he just crunching worst case scenarios though? And if you think about it, if he doesn't warn, if he doesn't provide the numbers, then when he leaves, people say, well, where was the flagging up? Where was the warning from the Bank of England? Thank you very much for telling us about the likely scenarios around Brexit. Really appreciate your
Can they
input.
become self-prophesying?
Well, they could, but equally, you do expect some commentary from the Bank of England in such an extraordinary circumstance.
You expect a balanced commentary.
What's
there's
balance where it helps the Brexiters, balance where it helps the Remainers.
Yeah, the glass is half full, the glass is half empty. I think as an independent body, the Bank of England should have a worst case scenario, a best case scenario, and something in the middle. Or maybe it's just the way it's been reflected in the press. But I think the Bank of England's been leaning very heavily on sterling before the original Brexit vote, saying if we vote to leave the UK, sterling's going to fall. I don't know what is going through the mind of those policymakers. I know Michael Saunders very well. That why would you try to undermine confidence in the currency, during periods of volatility?
I'm not sure they have done that. I think there's been undermining from other avenues, not necessarily from the central bank. But before we wrap up the Brexit conversation, I want to ask you very, very quickly, if you want to get into the UK market at this point, is there going to be a speed problem? For instance, the market is down heavily. Many people see an opportunity if there's good news. But will you even have a chance of getting onto any of these trades, not on options, but on the actual stocks, if there's good news because of the speed at which this could transpire?
Sterling, probably not. The FX market is very, very quick and efficient. I think the stock market, you will have time.
You will have an opportunity.
Yeah.
Okay, thank you very much for that, Christopher Lewis. We're going to pick up on the conversation just a bit.